Welcome to the Global Pulse, a short video series where our experts break down a trending topic in international business and why it matters to you.
The Inflation Reduction Act basically has several aspects that I'd like to address right now. One of them are production tax credits to encourage U.S. firms to basically perform their manufacturing production in the United States instead of overseas in other countries. And with respect to EV batteries for EV cars, approximately 1/3 of the cost of EV battery packs would be covered by these tax advantages if the rechargeable cells are made and packaged in the United States. Tesla, as a result, is planning to move its production of battery packs from Germany, where it was planning to go, move it back to the United States, largely being encouraged by these tax incentives. Also, Elon Musk has mentioned that he's planning, as part of Tesla, to process lithium here in the United States, saying lithium batteries are the new oil. A couple other aspects that I would like to address in the Inflation Reduction Act. One are lower drug costs that are likely to result from it. Currently, U.S. consumers pay a higher price for drugs produced in the U.S. than our neighbors in Europe and in Canada. Those countries are able to negotiate lower fees, lower charges, lower prices on drugs, even though they are produced in this country, than those faced by U.S. consumers. Medicare, starting in 2026, will be permitted to negotiate prices and fees with the drug companies on 10 large pharmaceuticals, 10 large drugs. And in 2025, Medicare beneficiaries will be protected in terms of out-of-pocket expenditures. There'll be a maximum of only $2,000 a year out of pocket for pharmaceutical spending. Then the third aspect of this legislation I'd like to talk about are the tax issue. Taxes will be increased. There'll be a 15% corporate minimum tax imposed, and there'll be a 1% tax on corporate buybacks. Now, the 1% tax is an interesting story behind that. Both political parties had agreed on removing a tax advantage that private equity firms have had until now, in which something called carried interest was being taxed at a lower capital gains rate rather than the higher ordinary income that it should have been taxed at. And since Senator Sinema from Arizona opposed that particular part of the legislation, a 1% tax on corporate buybacks was instituted. And then finally, the IRS budget is being substantially increased by $80 billion. And the CBO has estimated that over the next 10 years, the IRS, as a result of this additional budget, will be collecting an additional $204 billion, more than offsetting the extra $80 billion in cost, for a net savings of $124 billion. And this will be just collecting taxes that are due but are not being paid. And so it's not a tax increase. It's just collecting what is due. And the CBO, again, has flagged it as a very large savings of this amount. Thank you very much.